Welcome back to Talk Tickers, your go-to for breaking down the latest earnings calls. Today, we're digging into DocuSign. You know, their second quarter results just dropped, and boy, did they send a signal to the market. It was a pretty pivotal release, so let's get right into it. All right, here's how we're going to break this down. First, we'll hit the big headline numbers, the beat and raise. Then, we'll dissect why they did so well. After that, we'll look at their big AI growth engine, check out their guidance, and wrap it all up with our take for the next call. Okay, so let's get into the meat of it. Section 1, the bullish beat and raise. This is exactly what you want to see as an investor. DocuSign delivered strong results and then told the market, hey, the future looks even better. That's the combo that really gets a stock moving. So let's start with the top line. Revenue hit just over $800 million. Now that's solid growth, but the real story here is that they blew past what analysts were expecting. I mean, they beat the consensus by nearly $21 million. That is a huge beat, and it's a really strong signal to kick things off. And that strength didn't just stop at revenue. It flowed right down to the bottom line. Non-GAAP earnings per share came in at 92 cents. That's a solid 8% beat. You know, this tells you it's not just about making more sales. It's about being profitable and efficient while doing it. They're executing really well. Okay, but this is the number that really got Wall Street buzzing, billings. Now, if you're not familiar, billings are like a crystal ball for future revenue. And DocuSign's billings growth accelerated to 13%. Think about that. It's growing faster than their current revenue. That's a super powerful forward-looking indicator. And look, you don't have to take my word for it. The CEO, Alan Tiggison, he came right out and said it. Q2 was an outstanding quarter. He pointed directly to two things, their AI innovation and tweaks to how they sell. And based on these numbers, well, it's pretty clear those changes are working. All right, so that brings us to the big question. Why? What was actually behind these great numbers? Let's dissect this outperformance and get to the real drivers. The CFO actually laid it out pretty clearly on the call. He said the big billings beat came down to three main things. First, just good old-fashioned strong demand and customers sticking around. Second, they got a bit of a boost from some customers renewing their contracts early. And third, a slight move towards more folks paying for the whole year up front. So you've got a really nice mix there of solid business fundamentals and some favorable timing. Okay, let's talk about a super important metric for any company, like DocuSign, dollar net retention, or DNR. In simple terms, this number tells you if you're making more money from the customers you already have. Are they staying? Are they buying more stuff? Anything over 100% is what you're looking for. So what was DocuSign's number? 102%. Now, that might not sound like a giant leap, but it's a huge deal. A year ago, they were at 99%, meaning they were shrinking a tiny bit. Crossing that 100% line is a massive milestone. It means they've stopped the leak and are now actually growing with their existing customer base. That is a very, very healthy sign. Okay, so the core business is looking healthy, but that's only half the story. This quarter was really the first big proof point for their major strategic pivot, this whole shift into becoming a true AI platform. This is the future growth engine. So you really have to think of DocuSign as having two parts now. You've got the core e-signature business. That's the stable, reliable foundation. It's the bedrock. But then you have the future, the real growth engine, this new thing called Intelligent Agreement Management, or IAM for short. That's the rocket ship they're trying to build on top of that foundation. And with this new IAM platform, they're rolling out all these cool new AI-powered tools. We're talking about things that help you actually prepare an agreement, not just sign it, or verify someone's ID. The whole point is to move way beyond just the signature and help companies manage the entire life cycle of a contract. It's a much bigger vision. Now, this is what I think is their secret weapon. Their AI models are being trained on a dataset of nearly 100 million customer agreements. Think about that. That is an insane amount of data that their competitors just don't have access to. It creates this huge competitive moat around their AI business that's going to be really, really hard for anyone else to cross. All right, let's look at the road ahead. We've got management's guidance and a few headwinds they mentioned that we need to keep an eye on. So given how good the quarter was, it's no surprise they've raised their full-year guidance. You can see it right here. They bumped up their expectations for both revenue and, importantly, for billings. That's management telling us, hey, this wasn't a one-time fluke. We expect this momentum to keep going. Now, it's not all sunshine and rainbows. Management was pretty upfront about a few headwinds. The big one is their ongoing migration to the cloud, which is putting a little pressure on their margins. But, and this is a big but, they specifically said this is the peak year for those costs. So the implication is that this pressure should start to ease up as we go forward. Okay, time for my favorite part, the next call. Let's put all these pieces together and make a prediction for what comes next. So here's the billion-dollar question you've got to ask yourself. Is DocuSign still just that e-signature company from the pandemic, or is it morphing into an undervalued AI platform, kind of in disguise? The narrative is definitely starting to shift, and frankly, I think the answer is becoming pretty clear. Okay, so here's our call. We're rating the stock outperform, and here's the thesis in a nutshell. The market is still looking at DocuSign in the rearview mirror, pricing it like a simple utility, but the company is driving full speed ahead into AI. The big catalyst to watch for next quarter is any sign that this new AIM platform is landing bigger deals. If they can show that, we think the stock is going to get a major re-rating, meaning investors will start valuing it as a true AI company, and that means a higher stock price. And as always, please remember, this is not financial advice.